Christian Gattiker is Chief Strategist and Head of Research at Bank Julius Baer. Christian, thank you so much for joining us. In terms of, I guess your main portfolio, you're still sticking to the defensive sector cyclicals because the economy is still not looking good.
Yes, indeed. I think there is not too much to be expected over the next few weeks in terms of macroeconomic news flow. And I think on top of everything, we have all this turmoil with the European debt crisis, which is not really kind of helping sentiment also on the economic side. So I think against that backdrop, still a quite defensive stance is warranted, although there is, of course, now some certain temptation to become more constructive. I think it's simply too early to do that. We would wait a few weeks until things settle down.
And Krishna, how much is your portfolio strategy for the next 2 weeks going to take its cue from what the Fed says today? A lot of investors are hoping to get a positive message from the Fed, but many are saying, well, they're not going to deliver what the markets are hoping for. Will this be your benchmark on where equities and how much governments are prepared to do?
Well, I think the Fed announcement tonight will be rather interesting for the US dollar. I think any disappointment would be dollar strengthening. And to really come up with something like a shock and awe type of measure would take them a lot more than probably the consensus is within the Fed at this stage. So we are going for Operation Twist. That's the consensus. Maybe a rate cut, which is also symbolic, more rhetorics. I don't expect that we see any extreme measures at this juncture. I think we'll be rather on the disappointing side. Okay,
so talk me through your defensive sector, for example, stance. You like non-cyclicals such as telecoms, but also healthcare. And your only favorite sector within cyclicals is IT.
Yes, indeed. We saw quite a strong performance in IT stocks over the past few weeks against the overall quite sluggish market trend. Semiconductors actually broke out of a trading range, which is a positive. We think the fundamentals are good. They're very cash rich. Valuations are not too demanding after the recent sell-off. So I think it's at least some place to put a toe into the water, if you want to get a bit more constructive on overall market performance.
Yeah, and you're avoiding industrial stocks, but also consumer discretionary and financials. Now, I'm very interested in financials because, of course, there's so much concern about funding of French banks. There's also this concern with UBS. What's your take in general? Are we going to see much more money withdrawn from the European banks from U.S. funds?
Well, I guess the further development in the European debt crisis is basically the main driver for that to happen. You don't see any end game at this juncture, so I think it will be kind of another protracted way of getting this further down the road. So I don't expect anything from financials over the longer term. I think we're in a structural bear market for financials. Though, if we really get this entry point, this trading opportunity, I think financials will actually fly most, and that's the most tricky thing in a very defensive sector stance, to get that entry point at some stage, because you can get a huge rebound in these stocks despite lack of quality, despite basically fundamental difficult issues.
Christian Gattiker, thank you so much, Chief Strategist there and Head of Research at Bank Julius Baer.